Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into a Form 8K filing, and let me tell you, it's got more twists and turns than a cheap thriller, including a name change and a brand new CEO. Here's the scoop: NextNRG, formerly known as Easeville Holdings, just finalized a big stock offering, changed its name, brought in a new CEO, and completed a major acquisition all at once. We're going to break down what each of these moves mean. First up, this document is a Form 8K. Think of it as a corporate breaking news report. Companies use it to tell investors about major events that could affect their stock. This report is dated February 13, 2025, which means all this news just happened. The company we're talking about is NextNRG Inc. Previously, they were called Easeville Holdings Inc., but they decided to change it. Their stock is traded on the NASDAQ under the ticker symbol NXXT. Now let's get to the heart of the matter. This Form 8K filing covers the underwriting agreement, completion of an acquisition, unregistered sales of equity securities, officer changes, amendments to articles of incorporation, and some other stuff. We'll focus on the important parts. The first big item is about entering into an underwriting agreement. Basically, NextNRG partnered with a company called ThinkEquity LLC to sell shares of its stock to the public in what's called an offering. On February 13th, NextNRG agreed to sell 5 million shares of common stock at a price of $3 per share. This is known as the offering price. They also gave ThinkEquity the option to buy an additional 750,000 shares, representing 15% of the original amount. It's like a buy more if you want bonus. The sale of these shares closed on February 18th, 2025. After taking out fees and expenses, NextNRG expects to get about $13.3 million. What are they going to do with all that cash? They plan to use it to grow the business, pay off some debt, and for general needs, including working capital. As part of the deal, NextNRG gave ThinkEquity warrants to buy up to 250,000 shares of stock. These warrants, which are called representatives warrants, are like coupons that allow ThinkEquity to buy stock at $3.75 a share, a price that is higher than the initial offering price. ThinkEquity can use these warrants starting 180 days after the stock offering began and has 4.5 years to use them. There were some rules put in place. The underwriting agreement has standard promises, warranties, and protection from liabilities. It's like saying, we promise we're being honest, and if something goes wrong, we'll cover it. Everyone involved also agreed to a lockup period, meaning they can't sell their shares for a certain time. For directors and officers, it's 6 months, and for other major shareholders, it's 3 months. This helps to keep the stock price stable after the offering. Also, NextNRG has agreed to not sell any more stock for 3 months, with some exceptions. They can't do things like issue more stock, file for new stock offerings, or complete debt offerings except for standard bank loans. They also can't enter into deals that shift the economic risks of owning the stock to someone else. For 2 years after this, they can't do any at-the-market stock sales without ThinkEquity's permission. For 3 years after February 18th, 2025, ThinkEquity gets the first chance to be the investment bank for any future stock or debt offerings. NextNRG does. They get to decide if other brokers can participate and on what terms. Next big item, the acquisition of NextNRG Holding Corp. This means NextNRG, the one we are talking about, bought another company called NextNRG Holding Corp. Back in August 2023, NextNRG, then still known as Easeville, agreed to buy Next Charging LLC, a company that later became NextNRG Holding Corp. In February 2025, the deal closed. NextNRG acquired 100% of NextNRG Holding Corp, and it became a subsidiary, meaning NextNRG. To pay for NextNRG Holding Corp, the company issued 100 million shares of its own stock to the former owners of NextNRG Holding Corp, which were the shareholders of Next. Some of these shares vested immediately, meaning the shareholders of Next now own them outright, while others are subject to vesting, meaning they'll get them over time. This is called exchange shares. The issuance of these shares was not registered with the Securities and Exchange Commission, but the company believes it was allowed under certain exemptions. like Section 4A2 and Rule 506 of Regulation D. Now for the big changes in leadership. On February 14th, 2025, Michael D. Farkas became the new CEO and executive chairman of NextNRG. Yehuda Levy stepped down from being the interim CEO. Michael Farkas has experience as the founder and former CEO of Blink Charging Company. He also runs an investment firm called the Farkas Group. In addition, Joel Kleiner was appointed as Chief Financial Officer. Kleiner was the Chief Financial Officer of NextNRG since August 2024. He has experience in finance and accounting. Finally, the company changed its name. They filed a certificate of amendment with the state of Delaware to officially become NextNRG Inc. The change took effect on February 14th, 2025. NextNRG put out 2 press releases. One on February 13th, 2025, announcing the underwriting agreement and pricing of the stock offering. And another on February 18th, 2025, announcing the closing of the offering. Finally, the filing included the financial statements of Next as of December 31st, 2023 and 2022, and the related statements for those years. And also, the unaudited pro forma financial information is included. So, what does all of this mean? NextNRG has been very busy. They've raised a significant amount of money through the stock offering, acquired another company, changed their name, and appointed a new CEO. These are big changes, and it's important to consider the potential impacts. The company's new direction seems clear with the acquisition of NextNRG Holding. They're focusing on the energy space. Michael Farkas's experience with Blink Charging could be very valuable, but it also means he is likely to take over the role. One major opportunity is the potential growth in the energy sector. However, there are also risks. Integrating NextNRG Holding Corp, managing debt, and executing their business plan will be critical. Valuation is tough without seeing detailed financial projections, but let's try. If we assume they can achieve a revenue of, say, $50 million in the next year and trade at a price-to-sales ratio of 3, that would suggest a market cap of $150 million. With approximately 200 million shares outstanding after the offering and acquisition, that puts the stock price around 75 cents per share. Considering everything, I am leaning slightly bullish. I'd say a reasonable price range would be 60 cents to $1, with 75 cents being a sensible target. Of course, always remember to do your own research and consider your own risk tolerance before investing. Thanks for watching. If you found this helpful, please like, subscribe, and leave a comment below.